Okay, it's Sunday, it's June 23rd, 2019, and we're going to do a quick weekend review. This weekend has been a little bit different than many of the other past weekends because we had a bunch of new members. So thank you very much for those of you who have upgraded. I appreciate you trusting me and joining our tight-knit group of traders. We are basically looking at what I look at. Now, obviously, right now I'm doing this on a different computer so that I could make this quick video. And so with all of the upgraded members, we've been working around the clock. Me and Michael, I have been primarily to onboard them and to get them into the trade copier system with social trader tools. So this is going to give you an idea and familiarize yourself with the ability to familiarize yourself with what I'm doing and what to expect with this trade copier service. Why do I make so many pips? Why can I close with 1,000 to 2,000 and even sometimes 3,000 pips in a month? So for those of you who already saw this and have heard this before, I apologize. I'm going to run it through one more time because we have a bunch of brand new Forex brothers and sister members in this group. So in the past, and you may have seen in the membership area and me talk about in many videos that throughout different throughout different times of the year or different years based on certain cycles that have an impact on the market and certain currencies, I will tend to shift my focus on those currency pairs. For example, let's go back to like the global financial meltdown. It's the easiest one to really get everybody to understand what happened at that point in time. And when the carry trade started to unwind, I was able to execute a lot of trades on the dollar yen. Well, I was trading the majors anyway, but it was really relatively easy for me to find, for example, the continuation breakout trades on the dollar yen or the yen crosses, and because of that carry trade unwinding at that point. And it was, I mean, we received, for example, let me see if I can find it here. Pound yen. So the pound yen, whenever I trade the pound yen on the continuation breakout trades, we can earn anywhere from 150 pips to 250 pips. That's my final target. And I remember one week when I was trading with my students in the chat room, I was calling out these trades and also using the trade copier. We had 3 continuation breakout trades on the pound yen, earning 250 pips on each trade. So we ended up with well over 750 pips for those 3 trades right there, because then I had some other little trades on the pound yen. So that was, again, as a result of certain conditions affecting the market and me taking advantage of it. Those conditions don't always take place, right? There are times when the focus is all about the pound and, people really aren't paying attention necessarily to, let's say, the Eurozone. It could be a Brexit issue. And then we shift our focus over to Japan. And then we shift our focus over to the Eurozone. And it just goes back and forth. So those are opportunities when I can trade more than just the crosses that you see me trading. So let's say if it was the yen, I can trade the pound yen. I can trade the euro yen. I can trade the Australian yen. And you get my point. So those are opportunities where I get multiple trades. The Canadian yen, if those trades set up and I'm getting continuation breakout trades and something's affecting that market, you get the advantage of me watching charts just like this. So very often I'll have like 16, 17, maybe more currency pairs up on my screen and my monitor when the conditions more or less require me to be paying attention to other areas of the market that could be more active. So that gives us more trading opportunities. For example, a Canadian pair, right? The dollar Canadian, and then I've got the pound Canadian, and so on, euro Canadian. So these are our opportunities that we get to participate in, and then expect that I'm going to have those trades open. You'll know because I'll be making update videos like this, and you'll see the shift. Right now, it's really not like that. I really don't stare so much at this page or all of these charts right now. I just wanted to let you know, new members, that there are times during specific years, during certain events. And again, you are an advanced trader. You know that the market goes through cycles like that, and you probably are in tune with the market when you hear that. So prepared that I will be trading just like that. So let's take a look at the majors and the primary trades that we execute. Okay, we'll quickly start off with the daily time frame on the euro dollar. So obviously, again, the market is closed, and we're assessing the conditions from Friday. And right now, let's take a look at and review the this area of consolidation that I've been talking about for the last few weeks. So this low here set in place April 26th. So again, that low, and then it just started to roll sideways inside of this consolidation range. Here's the break, and then that new A low, B high see pullback. So remember, again, even when I use, so this is a continuation breakout trade, first of all, but even when I use the continuation breakout trade to identify signals on the daily time frame, well, again, we're just focusing right now on the daily time frame to try to get an idea of what to expect when the market opens for trading. Actually, it is open for trading. It just opened right now, just a minute ago. So again, so with the continuation breakout trades, very often we get a close above the B high, right? We got a new A low, B high, consolidation, retest, and then that closed candle above the B high. And then it's not uncommon to see it retrace and retest or go back inside of consolidation and hold. Remember, that's part of the T3 pattern. So also for those of you, again, who are new upgraded members, I'm sharing a much deeper level of my trading strategy and my trading system and what I'm doing as far as the technical analysis side of my system. The T3 program, or T3 pattern, is basically a way for me to identify the range of consolidation, how long it's been inside of consolidation, and where price tends to spend most of its time. So let me give you an example. Here we have that new A low, that B high, right? And then it goes inside of consolidation, and none of the candles close outside of that range. It spiked below that low, but it didn't close below that low. That's the initial consolidation range, that low, that high. Everything else goes sideways. That's the first step to identifying the consolidation range. Whether this is a 1 hour chart or a daily chart, it's all the same pattern for the most part. And then to identify the T3 pattern, which tells me I can expect, even with this retracement, even if this was a 1 hour chart, that it's not going to go too low and that I can expect a bounce and then the trend to continue higher. I then look at the high and the low of consolidation and draw a line right about in the middle of that consolidation range. That line just helps me visually be aware of where price is spending most of its time. Is it spending most of the time to the upside, most of the time to the downside? So you'll also notice that if I make this adjustment, there's a spike low, which is acting as support right here. Support and resistance. You can see how it sort of bottles up right there for a few days. But for the most part, from a technical point of view, this was a significant low here. This was March 7th, 2019. So at this point, I know that price is spending most of its time, and when it comes back down, it retests this. It's also a Fibonacci level, the 618. It sits right around that range. And then it continues and goes back up again. So far, this price swing, this new A low, B high, C retracement is holding. We obviously have to pay attention to some of these significant price swings here on the daily time frame. That's March 20th. The high's there at 1.1447, but it looks like it's going to continue, and then we have these Fibonacci extension targets. Now, I use these Fibonacci extension targets in the Fibonacci tool quite a bit on the daily time frame. It works a lot better when I see a trending move like this, and the fundamental reason for the euro dollar to move higher or lower or whatever direction I'm trading it in. Right now, we got a lot of news. We had FOMC last week. We made 350 pips on that day, and there was a lot of, excuse me, a lot of information, and the market sort of had to reevaluate its expectations, and there was a reevaluation in that currency, the dollar, with the results of and the statements from FOMC. So here we see this playing out. Now, as we continue along, my expectations as to whether or not it's going to reach this extension target back up here at the 1.1490 area or the 1.1500, they will continue to solidify as I continue to watch economic data out of the Eurozone, listen to the central bank, whatever central bank it is, right? Doesn't matter if it's the dollar, the euro, the Canadian, the pound. We need to pay attention to the comments coming out of and from those officials that can move price. So let's say for the United States, affecting the dollar, you have individuals that you want to pay attention to when they do speeches and engagements during the week where they're on record and the market's analyzing their speech and the content and the text within their speech. The same thing goes for any other central bank. So pay attention. We need to pay. That's what I'm going to be doing, is paying attention to the Eurozone, paying attention to comments out of the central bank, and making sure that it continues to confirm the fundamental reasons for the euro to strengthen versus the dollar, and also paying attention to the dollar, right? I want to make sure that there's going to be more dollar weakness. I need to be able to confirm that. So that's what helps me align all of these technical trades and my expectations along with the fundamentals. So this is looking okay. It doesn't mean that 100% I buy now and hold to that target, the 11500 area. It does not mean that. It means I need to manage it. I'm going to be managing these trades and managing this position, paying attention to news all day long, every night, all through the weekend, listening to comments to make sure that all of this continues to confirm my expectations here from a technical point of view. And then, of course, when anything changes, we see it change and the technicals start to change. So again, so far, everything looks okay. It wouldn't surprise me to see it stall somewhere between where it is now and the 1500, meaning that there could be another significant retracement, or the market could react differently, thinking, uh-oh, here we go, now we got another turning point. Whether or not that actually plays out, I'll have to continue to wait and see how that takes place. Let's take a look at another chart. Now, this is the Euro-Yen daily time frame. Daily chart. Remember, we're just looking at the daily chart. So from a technical point, I want to stop, take a look at what's going on here. Now, I can see a lot of divergence taking place here, but that last move last week, even though it had some divergence, it didn't take, excuse me, I'm sorry about that. That caught me off guard. Otherwise, I would have muted that. I apologize for doing that in your ear. So that low last week did not take out that low, and that's okay, but we need to be paying attention to what's going on here. We've got a break below the low from the beginning of the year, January 2nd, and there wasn't the confirmation for a sell signal on a continuation breakout trade here. You can see the divergence here in the indicators, and the Bollinger Bands just weren't really playing along and giving me the support that I needed on that low. So I didn't really expect that it was going to go much lower. And then we were able to participate in this reversal back up here earlier in the month, or late last month in May, I'm sorry. So now we've got this new retest, and it looks like at this point it'll probably continue. I don't know how much higher it's going to continue. And the reason is I don't have a B price swing to really gauge the depth of the retracement and then find my extension targets. That hasn't really happened just yet. So what it looks like I'm starting to see here is a W bottom pattern. So there's multiple forms of confirmation for me, the way I trade it on these W bottom patterns, what I expect. So the first step is to find consolidation on a W bottom pattern. Usually when there's a W bottom pattern like this, there's going to be multiple forms inside of this W bottom that I'll use as confirmation, and the continuation breakout trade. So now I have a high and a low here. I'm going to put another support low here. So this is my range of consolidation right now. So at this point, I need to wait to see if and when price actually breaks out of this range. This is my consolidation. So this is the way I would look at it if this was a 1 hour chart. But it is what we're looking at right now, a daily chart. But this is going to help me with the trend. This is going to help me really solidify my decisions when I start getting in daily. I can hold on to some of these trades a little bit longer. For example, if I take a continuation breakout trade on the 1 hour chart on the Euro Yen, I usually trade it to a 150 pip final take profit. So in order for me to do that, I want to make sure that I'm trading in the right direction. Right now, I'm still not too convinced that if I see a continuation breakout trade on the 1 hour time frame, based on what I see here on the daily, that it's really going to clear. Once it clears this high and then maybe moves up and then pulls back and gives me the retracement, that healthy retracement confirmation, then I would expect that I could trade and hold for those continuation breakout trades a lot longer on the 1 hour time frame. So that's when you can expect to see those 150 pip trades on the Euro Yen and 250 pip trades on the Pound Yen in your account. Right now, we're not there yet. Again, based on what I see here on the daily time frame. That could happen, and it can change in a day or two or in a week, but I still need more confirmation that this is likely a turning point and that it's going to continue technically to go back up higher where I can trade to some of those final bigger targets that we all want. So that's how I'm going to be trading. I expect that it's probably going to pop up a little bit, but right now I'm thinking because it's still inside of this consolidation range, if this was a 1 hour time frame, I would trade very, very carefully inside of consolidation. And to me, where price is right now, it's inside of the middle of this consolidation range. And that's when it gets choppy. That's when it gets less reliable. Sometimes you get these strong bullish candles, and then the next candle, it just drops right back down again, and you get stopped out. That's why it's a little more difficult to trade inside of consolidation. There's a lot to pay attention to at this point. So I'm going to be watching this for confirmation. I don't know that I'm going to get a trade immediately right off the open. I don't know that I'm going to fade it with an HL30 or the euro dollar. So I'll be paying attention to the open first 30 minutes or so, first hour or two. Sometimes I'll trade the HL30, or sometimes I'll wait and take an HL30 when I see it on another currency pair when it's more reliable, meaning that there's going to be more participation. It's at a time when there's more more volume, London or New York trading session. Very often, Mondays are slow for me. If you look at the performance page on the forexautomatedtradesignals.com website, the performance page, I think there was one Monday 2 weeks back, I only had one trade. Sometimes I have no trades. I mean, it can happen. It can just happen. We had a pretty big week. So we had 350 pips on FOMC. The market's adjusting to everything that happened. We made 759 pips last week. There was quite a few trading opportunities, and it could be that the market's going to more or less digest this and take a look at the economic data that's available this coming week, and it might be a slow Monday. I really can't say. If it is, you'll know. If you don't see any trades, don't panic. It doesn't mean that I'm not trading. It just means I'm not getting any signals according to my trades, my system. So again, this is what I'm looking at. Again, I see that it could likely move up, but how far is the question? I've got to have a target before I get into the trade. If I don't have a target, I've got nothing to aim at. I'm not going to take the trade. I'll wait until I have the target. So that's the euro dollar and the euro yen. At this point, I'm not really going to focus in on the pound dollar. There's really not a whole lot to talk about. I'm seeing the divergence here. This is the daily time frame. I'm seeing the divergence here on the pound dollar. Again, last week's low, that actual low here was, let me get that in there, the 18th. So I'm seeing the low in price with a lot of divergence here. That's good. Bollinger Bands really aren't looking the way I would like them to. I use another chart template with bandwidth and %B for confirming the actual low and the reversal. But again, I'm dealing with this high right here. This is a W bottom pattern here. And it's the same thing that I showed you just a moment ago in the euro yen. If I'm looking at a W bottom pattern, I'm going to find consolidation and then wait. In order for me to expect price is going to go much higher, I've got to wait to see if when price closes above the high of consolidation, and then let it move up, and then let it pull back down, creating that healthy retest, retracement, and then at that C, I'll have a new A low, a B high, a C retracement, and then I can trade it to the extension target. Right now, I can't trade it to the extension target. Notice how, again, if I was to use the Fibonacci tool here, I'm going to go ahead and open this up in just a minute, but if I was to use the Fibonacci tool here, I'm looking at that. That's all I'm looking at. I'll open it up here. So I've got an A low, B high. I don't have a C confirmed. I don't have the retracement. It could take off, but usually this is a pretty healthy move, and it gives me confirmation that the trend's going to continue to the upside. So again, this is a W bottom pattern that I'm looking at, but extremely challenging to trade because, again, it's still just not ready in my opinion. I'm still waiting for confirmation. The first step of confirmation is to wait for that candle, the daily candle, to close above that B high. So I'm waiting for this as well for more confirmation. So what that means is that I'm either going to trade a reversal up here at resistance when it pushes up and then back down again, or I'm going to trade cautiously or maybe even set aside until I actually get more confirmation. I'm all about confirmation. I'll wait. I'll skip. I'll sit and watch a whole trading session and really not participate in much of the movement if I just simply don't have confirmation on my trades. I want to be right 100% on my trades. I know that I'm going to experience a loss, but the way, again, to improve my performance is again to pay attention to my analysis and my execution, making sure I'm 100% right here. So this is, back in the day, I probably would have taken a chance and just bought because it looked bullish. But I've got to take into consideration the amount of time that it's been bullish and what it's running into, and then what would be additional forms of confirmation that this trend is going to continue higher. So at this point, I'm really not going to talk a whole lot about the pound dollar today. I probably will take a look at it on Monday evening, and then we'll assess the conditions there. So again, these were all daily time frames, everything that I've showed you so far. Again, for new upgraded members, thank you very much again. I appreciate your trust. You're going to be making a lot of money with this trade copier. You're going to be really pleased with it. This is how I trade. I'm really, really active, really, really hands-on. There's a lot of trades that go on. Again, prepare for that. Make sure that you understand that. Make sure that you have adjusted lot sizing So here we go. Let's get started.